Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, July 6, 2009. The dollar was up in today's trading as risk aversion continued from last week, especially in the wake of the worse than expected non-farm payroll release from the U.S. last Thursday. Global equities were down today, reflecting the more downbeat attitude towards global economic recovery prospects. The euro-dollar pair, which entered the session testing a line of support, broke below that trend line, sliding to 1.3875, a 100 pip decline from its high near 1.40. The New York Open did bring buyers for the pair, with the euro erasing part of its losses, as U.S. stocks bounced back from their morning lows as an auction of U.S. Treasury bills drew strong demand. The yen was a big benefactor to the increase in risk aversion overnight. The euro-yen pair broke 235 pips lower from its open around 134.15 to set an intraday low near 131.70. European stocks saw substantial losses, which pressured the pair, bringing it to test its lows from June 23rd. Also this week, second quarter earnings season gets underway in the U.S., with poor earnings increasing the chance and the sense of a risk aversion. The pound was particularly hard hit today, tumbling 200 pips to a 4-week low against the dollar near the 1.61 area. That broke below support near a band of near 1.6250 and 1.63 that had held for the past 4 weeks. The fall below support happened during European trading as the pound was pressured by sliding London stocks and by speculation that the Bank of England will extend its quantitative easing program. There are also increased worries over how the government will be able to impose fiscal discipline on its private sector. However, the bounce back in U.S. stocks helped the pound to pare most of its losses in New York trading. The pound yen, meanwhile, plunged 380 pips to the 153 level, the weakest the pound has been against the yen since May 31st. The Bank of England has so far committed 125 billion pounds to quantitative easing in an attempt to boost money supply. It has permission from the Treasury for a further 25 billion pounds of such purchases, which analysts expected to be announced this week. The printing of money to stimulate credit markets dilutes the value of the pound, and why that news is pressuring it. The dollar was higher against its other major rivals. It did fall to the yen. From its open near the 96 level, the pair fell down to the 94.70 level in New York trading. That broke a short-term upward sloping line of support from last week. Today's low also cleared support from 2 weeks ago near 94.80. The services sector in the U.S., though still contracting, did so at a slower pace in June as the economy begins to move away from the depths of its recession that was seen in the first quarter. The ISM non-manufacturing index rose to 47, slightly higher than expectations, as business activity, new orders, employment, and prices subgauges all improved compared to May. The prices index showed a positive reading for the first time since last October. The US dollar-Canadian dollar pair rose to a new monthly high of 1.1679. Trading today was limited to relatively small range, and today's high was only slightly above the high set by the pair last week. The loonie was pressured by the increase in risk aversion and a drop in oil prices. However, following the U.S. services news, the pair managed to fall back down to its upward sloping short-term support level. Tonight, New Zealand will post its business confidence data, and Australia releases its construction PMI, followed by the decision by the Reserve Bank of Australia. Overnight, the UK releases its manufacturing and industrial production. Tomorrow, there are no key U.S. releases, while Canada posts data on building permits and its IV PMI. And that concludes our broadcast for today. For our U.S. viewers, hope you had a great 4th of July weekend. And as always, thank you for watching us here at CMSFX.com, and happy trading.